Hey, it's Lisa Last here, and I wanted to shoot a video talking about what term you should pick when you are getting a new mortgage. So just a quick refresher, when you get a mortgage, you get to pick a 1, 2, 3, 4, 5, 6, 7, or 10-year term. That is the length of time that the lender is going to guarantee you the interest rate, guarantee the payment, and you're going to know that you have that level of certainty. If you leave the lender during that time, you're going to face a penalty unless you port the mortgage. If you decide, you can pick an amortization with most lenders anywhere from 5 years up to 25 years. Some lenders you can do 30 depending on your down payment. The amortization will indicate your payment. So the lower the amortization, the quicker you'll pay it off, the higher the payment. So let's move on to what do I see my particular group of clients taking for mortgages. So the peanut butter and jelly of the mortgage world has always been the 5-year fixed rate. Why that is, I couldn't 100% tell you, but it is. That's the most common term that people tend to pick. People that are taking shorter terms are usually doing so for a particular reason. A 4-year, which I've done very few of in my career, is popular with somebody who has a 4-year contract like military or RCMP. A 1-year is for somebody who likes to play a little Russian roulette and would like to see every year where the rates are at. I think a big chunk of my clients would be taking a 2-year term right now, trying to see if rates come down. But unfortunately, the rate is so high right now that they just really can't see the benefit. So I've got about, I'd say 30% of my book of business is taking a 3-year. And the rate is a bit higher on a 3-year than a 5-year. But their goal is in 3 years when they're up for renewal, the rate is going to be significantly lower than market rates right now. And in the end, they're going to win. The other chunk of my clients are taking the 5-year fixed. Of that group that's taking the 5-year fixed, I would say half of them hit me with this. Lisa, I hate mortgaging. I hate adulting. I don't want to deal with mortgages. Please don't call me unless you're wishing me a happy birthday, and I'll talk to you again in 5 years. Cool. The other half of those people taking the 5-year fixed are taking it because they don't know that they're going to win on the 3-year, and their goal is that if in a year or 2 or 3 rates have significantly come down, I'm going to give them a call and say, hey, let's find out your penalty and see if it's worthwhile to cancel your existing mortgage, move to a new lender at no charge, and include the penalty in the mortgage. And sometimes that really works. Other times it doesn't. So when you're considering what the market's doing right now in rates, are rates going to come down here again with the next Bank of Canada rate announcement? I think the variable way may come down, but will the fix come down? Maybe, maybe not. We were over 1% higher a year ago. So when you're looking at these things, give me a ring. We'll work through the pros and cons and go from there.